This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to follow Wall Street higher as China pledges to support growth and the US economy shows resilience. The Fed's preferred inflation gauge is out later for fresh hints on the rate outlook. Beijing top leadership is ramping up efforts to revive growth with promises on fiscal spending and stopping the housing slump. Plus, Japan's ruling party set to choose its new leader. We'll take a look at the economic and geopolitical challenges facing the next prime minister.
It's really a big day here in Japan, isn't it, Heidi? Because we get the president of the LDP today, and that will mean that we're getting a new prime minister. And what that really means when it comes to tackling the series of challenges that Japan faces, whether it's really that economic revival that we're seeing here in Japan, or else also geopolitical tensions rising. Of course, we have seen those China tensions continuing to increase. We have seen Beijing now fire its first intercontinental ballistic missile into the Pacific in 44 years. Japan also sailing its vessel through the sensitive Taiwan Strait.
Yeah, you're talking about, of course, these ongoing, both historic but also fresh tensions with Beijing, right? And in fact, China really has some problems of its own that it does really look like it's doubling down to try and deal with. We've waited, economists, investors alike, for, more decisive sort of kitchen sink-sized action when it comes to stimulus, both fiscal and monetary. And it does seem like the pledges are starting to head that way, right? After the slew of measures that were already announced in the stimulus package, after the somewhat unexpected pledge to begin household payments to certain parts of society, we now also heard in this Politburo huddle really the need to be able to be more forceful when it comes to meeting this GDP target, the sort of kind of underlying dedication and the ramped up efforts to revive growth, pledges to support fiscal spending, stabilising the beleaguered property sector. That really gives the new momentum to stimulus measures and I guess the seriousness and the priority being given by Xi Jinping's huddle of that 24-man Politburo to really support that annual economic goal. There had been obviously a lot of debate as to whether that 5% target was something that Beijing was willing to sacrifice in this slowdown.
And all of that optimism about the Chinese markets leading to the Chinese stock markets also getting a boost, but also those Chinese stocks listed in the U.S. with the Golden Dragon Index seeing its best day since 2022. Of course, we had a lot of data overnight, including economic data from the U.S. being revised higher for economic growth since the pandemic actually being in better shape than expected. We also had the tech sector moving a lot because we had that support coming from Micron's earnings, but at the same time, reports of that DOJ probe into supermicrocomputer hitting the sector as well. Right now, futures not doing much, but of course, we're watching also the trajectory of yields slightly higher throughout the week. Of course, we have seen those better economic numbers really fading confidence that the Fed will be able to cut rates as fast as markets had expected. But take a look at what's happening across Asia because we had a little bit of support for the dollar. We have seen the Japanese yen really under pressure for the past few days. We're talking about that 145 level against the U.S. dollar being hit in the overnight session. We're now seeing it at around that 145 level still. So it's really to do with how the BOJ is also expected to not rush into hiking those rates that we've seen. Of course, we do have also a little bit more volatility when it comes to the yen, given the LDP presidential elections today. We are going to get those results in the afternoon session today, so do watch out for that. Nikkei futures up 0.4%. We're already at levels that we haven't seen in about 2 weeks. So we are seeing that boost to equity markets across Asia, the Korean market also at the highest in about 2 weeks, Heidi.
Where we are now, I think.
And of course, China's top leaders, Shery, really ramping up these efforts and certainly the rhetoric to revive growth with pledges to support fiscal spending, to stabilise the property sector. It does really inject some new momentum when it comes to really the slew of stimulus measures that have already been announced. For more, let's bring out China correspondent Min Lo, who joins us in Hong Kong. And, the market reaction is pretty clear. We've seen Chinese stocks headed for what their best performance, best week in about a decade or more. Not so hard to do, I guess, when you take a look at just how depressed the levels already were for valuations. I guess the question is whether this can last.
Yeah, what a week it has been, right? The CSI 300, as you said, set for the biggest weekly gain in over a decade, and it's finally erased the year-to-date losses so far. The Hang Seng China Index as well jumped 4.8% yesterday. That's the highest level that we have seen since February of 2023. And if you look at the setup for the China Open later today, the Golden Dragon Index was up some 11% overnight. It looks like we are poised for this 8th straight session of gains on the CSI 300, and it's really because of this back-to-back announcement of the stimulus, right? On Tuesday, you had the monetary policy, the measures for the capital markets. Wednesday, it was the cash handout to the extreme poor, the measures to shore up employment. And Thursday, it was the Politburo meeting, the fiscal package, the property measures. And so the big gainers would be the property developers. That index was up 16% yesterday. The likes of Shimao jumping 40% yesterday as well. And consumer staples, another big gainer on the back of the news that the government is giving cash handouts to the extreme poor. That was up some 9%, I believe, yesterday. Even though our Bloomberg economist is saying that cash handout isn't going to move the needle very much, given it's only benefiting a very tiny sliver of the population. But still, it's this coordinated announcement of the policies all at the same time for every corner of the economy that's bringing the animal spirits back to the China markets.
And why did we focus so much on the Politburo announcement? Of course, we just heard more pledges, so all combined. Just walk us through the stimulus measures that we're talking about here.
Yeah, there was a very short readout from the Politburo meeting, but a very punchy one. And what really stood out to me is the language, especially around the property sector, because it talked about how it seems like the KPI now for the government is to stop the decline. Now, that's a phrase that the government hasn't really used before, and it's clear that the mandate has now shifted away from deflating the property sector to really stopping that decline in home prices, the decline in home sales, the downturn that's been going on for 4 years now. Not a lot of mention of new measures, because they made a nod to some of the existing measures like cutting mortgage rates, reducing home buying curbs, reducing oversupply. But could that mean that there might be more measures? Is the government going to step in as the buyer of last resort? Will they widen the use of local government bonds to buy up those unsold homes? That's something that's key to watch. The fiscal policy side, the government said it will step up spending as necessary, a departure from the past, because previous Politburo readouts had said something like a proactive fiscal policy. That language a little bit vague, but Reuters is reporting that Ministry of Finance is planning to issue some 2 trillion yuan in special sovereign bonds. Half of that to boost consumption, half of that to tackle local government debt. So if that's true, that's a big off-budget boost to fiscal spending. And then around monetary policy, the readout says forceful implementation of interest rate cuts. Again, very different from language in the past where they have said a prudent monetary policy. So it's that shift in the tone that's significantly different from the past, that shows the urgency that the government is pouring its entire weight behind the economy to hit that growth target this year.
Thanks, China correspondent Min Lo there. Let's bring our first guest for the Asia Trade. Jay Hatfield is the CEO at Infrastructure Capital Advisors. So, Jay, certainly in the rhetoric, perhaps the level of desperation when it comes to the language, we're hearing what could be a game changer, right, from Beijing. Would you be waiting to see the execution before getting too excited in terms of an economic turnaround, and certainly a turnaround for Chinese assets?
Thanks, Haidi. It's great to be on. Well, we've actually been more optimistic, and when we were on your program a while ago, even said this about the Chinese economy than almost all global investors, particularly Americans, for 2 reasons. The first is that China does save 45% of their GDP, and they are able to keep their industrial economy going fairly strongly because of investment. Obviously, a huge problem in the property sector and with the consumer. But last time we were on, we said that the only good thing, or one of the good things about a centrally planned economy, is that once the government decides to deal with it, which it seems like just happened, then they have all the tools. And then the other point I make, we follow the global monetary base. We publicize that on our website. And we think that monetary policy is way more powerful than most investors do. And if you look at the situation with the PBOC, they have a lot of dry powder. They've only grown the money supply at 1.5% normal growth would be more like 5, and inflation is relatively tame. So they have a lot of dry powder. And then the other point that's also relevant, and David Tepper mentioned it on another channel this morning when he was justifying being really long Chinese stocks, that the fact the Fed moved aggressively gives a lot of headroom to both China and Japan to moderate, or in the case of China, cut monetary or have loose monetary policy. So I wouldn't ignore the fact the Fed has given headroom to these other.
What's a risk that, effective these measures might be, and the intention is clearly much stronger, if this is sort of a kind of a cyclical, forceful lift to growth? That's great, obviously, in the short to medium term. Would you still be worried about the more deeply rooted structural problems that do exist with the Chinese economy?
Well, I think that would be a huge problem if China didn't save 45% of their GDP. So they actually invest that fairly poorly, at least compared to the United States. So in other words, the return on invested capital is pretty low, and that reflects the structural issues that you're describing. But even a low return on invested capital with that much being saved still produces about a normal growth rate of about 5. So I think that in the case of China, not Japan, but in the case of China, because of that gigantic, really the highest in the world savings rate, that offsets the fact that some inefficiencies relative to the communist system.
Jay, how closely are you watching the LDP election here in Japan for a sense of direction of where the yen goes from here?
Well, obviously it's important, but we do think that monetary policy is more important and is a little bit like China in that they do have the headroom from the Fed. They haven't increased the money supply barely at all. So all the discussion of yield curve control we think is overblown, because normally Japanese rates are really low anyway. So we think that the central bank has flexibility, BOJ, to keep rates where they are. They're not really that stimulative. There's only 60 basis point difference between the policy rate, short-term rate, and the 10-year. So we think it's sort of a misnomer that there's a super loose policy going on. And you mentioned the weak yen, although it's been up and then down. The fact that the Fed is cutting has taken some pressure off of the yen.
What does that mean for stock markets here? Because we have seen, of course, exporters benefit from a weak yen, but recently with the strength of the yen now back, those domestic-focused stocks are doing very well.
Yes, well, we do think that the rally, the global rally, will continue. Japan was really leading it. We think they'll continue to participate. Sort of the more risk you take, the better. So we do think that global markets, emerging markets, which would be China and even Japan, should participate. So we are bullish about not just these factors we're talking about in China and Japan, but the whole world is cutting interest rates, except Japan, but they're hopefully not going to raise them. But not just the U.S. Eurozone actually has a bigger monetary base than we do. They're ahead of us. Canada is ahead of us. So that's just a great time to put on risk. It's not just that rates go lower. That means that you have to inject capital into the banking system. The monetary base globally grows, and that tends to inflate both the stock and bond markets. So we're bullish globally. There's a lot of cheap stocks in the U.S. as well, but there's also a lot of undervalued companies in the emerging markets and even Japan.
Jay Hatfield, good to have you with us, CEO at the Infrastructure Capital Advisors. And coming up on the Asia Trade, we'll look at how Japan's leadership vote today could affect the LDP's performance in the next general election. Plus, Capital.com joins us to discuss how looser financial conditions are supporting highly cyclical Asian markets. Much more ahead. This is Bloomberg. big day here in Japan. The ruling party votes for a new leader later today, with the winner set to replace the outgoing Fumio Kishida as prime minister. For more, Japan economy and government editor Paul Jackson joins us now. And Paul, a busy day ahead for you as well. Tell us a little bit about what to expect today and also the next few days, the next week.
Well, we're expecting the vote this afternoon around 2 to 2:30. The first round of results should come out. That should be inconclusive. Remember, we've got a record field of 9 candidates, so there's scope for some surprises. That first vote includes regional LDP members plus the MPs. So we're expecting that vote at that point then to lead to a runoff between the top 2 candidates. And in that second round of voting, the MPs have far more say in the decision by a factor of about 8 to 1, and we get the result about an hour later. Of course, there could be some changes to the schedule if the 2 in the runoff give speeches or something before that final runoff. The details could change a little bit. Following up from that, they'll become leader of LDP, give a press conference this evening, so we get a little bit more information on what they're planning to do at the start of their tenure. And then as we get into next week, Parliament opens, and we should have the leader of the LDP installed as Prime Minister probably on Tuesday, with a cabinet to go with.
And the big question mark is who that leader is going to be at this point, right?
That's right. So we've got, among the 9 candidates, we've got 3 front runners. We've got former Defence Minister Shigeru Ishiba, who's long been one of the most popular politicians out and about in Japan, in the regions, but perhaps not so popular amongst MPs here in Tokyo. We also have Sanae Takeichi, who's well known as a hawk on political matters. And she's very much in favour of the BOJ sticking with stimulus, going slower on rate hikes and stuff like that. And then we've got third frontrunner is Shinjiro Koizumi, and he's son of a former prime minister. He's making himself out to be a reformist, like his prime minister. He would be Japan's youngest ever premier if he wins, and he's perhaps the face that could best renovate the image of the ruling party after it's been mired in scandals, funding scandals, which is part of the reason why Kishida stepped down.
So many issues to deal with and challenges. Of course, we have talked extensively about the economy, but now we continue to see these tensions with China brew as well.
That's right. I mean, first of all, you know, the economic divergence in among the candidates is worth flagging. I think if it's Ishiba who wins, we continue to edge away from Abenomics and stimulus. If it's Koizumi, he wants to accelerate reform. And if it's Takaichi, well, she kind of wants to put the brakes on things and stick with stimulus, kind of go back, if you like, towards Abenomics. So it's a kind of inch forward, accelerate, or hit the brakes, if you like. Now, on foreign policy, I'd say one of the key factors to watch is, among others, is visits to Yasukuni. And both Sanae Takaichi and Shinjiro Koizumi visited that shrine, which causes a lot of angst, obviously, amongst Japan's Asian neighbours. So whether they would continue to make those visits or not is a key point.
Paul Jackson, our Japan economy and government editor, with a busy day ahead as we get those results later today in the afternoon. And stick around for more analysis on Japan's leadership race. We'll be joined by the Council on Foreign Relations shortly. Haidi.
Yeah, a lot going on when it comes to geopolitics, Shery, because we're continuing to watch the situation in the Middle East, where Israeli Prime Minister Benjamin Netanyahu has rejected a push for a ceasefire with Hezbollah, saying his military will indefinitely maintain its bombardment of the militant group targets in Lebanon. Let's bring Bloomberg's Michael Heath for the latest. Perhaps unsurprising that this was rejected. What would it take for these goals to be achieved for Israel?
Well, I mean, yeah, they sort of haven't set them out, but the sense is that Hezbollah needs to, basically pledge that it's going to stop firing. I mean, it's been steadily bombarding northern Israel since the outbreak of the war in Gaza. And Israel's had to remove evacuate a lot of people from that northern area, and it wants to put them back in there. So Hezbollah needs to stop bombing, and it sort of needs to pull back from Israel's border. Now,
which they won't do until the
war in Gaza stops. Exactly.
Gaza stops,
so, it's sort of chicken and egg situation there. But Israel's sort of point of view now is that Hezbollah's not going to agree to anything unless it's actually hit militarily. I mean, this fight has been sort of brewing ever since the end of the last war in 2006. And the surprise was probably that Gaza actually became the centre point of the conflict. So now that Israel started, it's going to keep hitting. I mean, we saw they assassinated another senior commander yesterday. So they're just not going to stop this, and I don't think it's much of a surprise that, having done this for 4 or 5 days, that Netanyahu said we're not going to have a ceasefire, particularly for 3 weeks, because Hezbollah would just use that to rearm. I mean, they've been around a long time. Everyone sort of knows their modus operandi there. So perhaps a shorter ceasefire could happen, just to protect the civilians and try and allow people to move out of these areas, because obviously, I mean, Hezbollah in a sense keeps Lebanon as a state hostage. I mean, it's so powerful within there. And because it is among civilians so much, I mean, the reality is you're going to get a lot of civilian deaths. I mean, we've already seen 600 people killed since Monday. I mean, it's very, very severe death toll, and it's only going to sort of worsen as we go on there. And again, it's Gaza. You've got a built-up area. You've got civilians there. You've got fighters in among them, and you're trying to target them. And it's always going to happen. There'll be fallout, unfortunately.
Bloomberg's Michael Heath there with the latest. More ahead on the Asia trade. This is Bloomberg. Latest on the corporate front, and the CEO of Hong Kong-based New World Development has resigned after its first annual loss in 2 decades. Adrian Chung is the grandson of the company's founder and took over as CEO in 2020. His resignation adds to questions over succession for one of Asia's wealthiest clans. COO Ma Seoul-chung will take over as New World's CEO. Wall Street heavyweight Citi and Apollo are teaming up to work together on $25 billion worth of deals in the private credit market over the next 5 years. Mubadala and Apollo's insurance unit, Athene, will also participate. Bloomberg has learned the exclusive partnership will arrange financing for corporate and private equity clients. Supermicro plunged the most in a month on a report that the US Justice Department is looking into an ex-employee's claim of accounting violations. Sources say a prosecutor has reached out to people who may have relevant information. An ex-employee claimed in federal court that Supermicro sought to overstate its revenue, and a Hindenburg research report claimed accounting red flags. More ahead on the Asia trade. This is Bloomberg.
We have breaking news out of Tokyo right now. We are getting the CPI year-on-year for the city, coming in at growth of 2.2% for the month of September. This is in line with expectations, a slight deceleration from the previous month. But take out fresh food and you get core CPI year-on-year growth of 2% for the month of September. Of course, we've watched the Tokyo CPI numbers because they're an indicator of nationwide prices. And we know that core inflation here in Japan nationwide had stayed above that 2% BOJ target for more than 2 years. We'll continue to watch the inflation momentum that we're getting in Japan at the moment, with that positive wage price cycle resulting from those spring Shunto pay negotiations. And of course, it's also election day here in Japan today. Ruling Liberal Democratic Party voting for a new leader in a few hours, with the winner set to become the nation's next prime minister. It's been one of the most open races in the Conservative Party's history, with a record 9 candidates in the running.
It's a crowded field of contenders vying for a job that comes with unprecedented challenges. The large field of candidates in Japan's ruling party election makes it likely that no one will secure a majority, which would trigger another round between the top two contenders. Among those on watch for a potential runoff, Shinjiro Koizumi, the son of a former prime minister who at 43 could become Japan's youngest prime minister. Shigeru Ishiba, a former defense minister who's running for the fifth time. And Sanae Takaichi, a hardline conservative who would be Japan's first female prime minister if she wins her party's backing. She's also one of the most outspoken on the Bank of Japan's policy path as an advocate of monetary easing.
She has basically said that the BOJ is making a mistake by moving as quickly as it is to raise interest rates. And frankly, I think that sets the Takaichi government up for possible conflict because she really wants easy money to continue.
Japan's next leader will need to grapple with geopolitical challenges as well, as the country gets pulled deeper into tensions between the U.S. and China. Tokyo faces threats of retaliation from Beijing amid pressure from Washington to tighten restrictions on sales of advanced chip technology. Adding to the uncertainties, the tight U.S. presidential race, though both candidates for the White House have opposed Nippon Steel's $14 billion takeover bid for U.S. Steel.
U.S. Steel should remain American-owned and American-operated.
U.S. Steel is now being sold to Japan. I will stop it. We got to do fast. We got to work fast, but we're not going to let it happen.
Some common ground for most of the candidates is the revival of Japan's nuclear power industry. 13 years after the Fukushima disaster, this is seen as a way to improve energy independence and reduce carbon emissions. Whoever wins Friday's vote is expected to call a national election soon, seeking to shore up support from a Japanese public weary of scandal and demanding sustainable economic growth.
Let's bring in our next guest, who says the LDP vote is all about the next general election, with the ruling party lagging in opinion polls. With us now is Sheila Smith, Senior Fellow at the Council on Foreign Relations. Sheila, great to have you with us. Of course, we're coming from this funding scandal that has hit the LDP. We're also not having, having most factions actually dissolved because of all of this. Very low visibility. What are your expectations for today?
So I think your setup piece was terrific. I think this is the most exciting or unpredictable, depending on how you look at it, race that I've seen for the LDP leadership in most of my career. I think we're going to have three people at the top of the list, as you noted, Mr. Ishiba, Ms. Takaichi, and Koizumi, the junior. It looks today, if you are reading the Japanese press, like it's going to end up being an Ishiba versus Takaichi battle. And I think that's going to pose some pressures on the LDP minister, the Diet members themselves, to figure out really what kind of leader they want to go into the general election with. So I think there's a certain degree of anticipation here that this is not going to be an easy choice for Japan's sitting parliamentarians.
What would be the implications for the Japanese economy? I mean, it's interesting because it's still within the ruling Liberal Democratic Party. We know that we're not expecting huge changes, but these candidates do have slightly differing views when it comes to monetary policy and fiscal policy as well.
That's right. And the more sort of technocratic economists are not in the running. So what you've got in the three leaders are people who really don't have a full-blown economic plan. Instead, you've got people who have other priorities. Takaichi, as you noted, and I think Tobias Harris kindly pointed out for us, she wants monetary easing, but she also wants to avoid having to impose a defense tax on the Japanese taxpayer. So there are political reasons behind some of her thoughts, as well as Koizumi and Ishiba. I think the common theme, though, and I think among most of the candidates this round, has been the rural economy, the idea of rural revitalization, which means more government spending to help the hollowed out towns and cities of rural Japan, help get them through the demographic challenge, but also the lack of economic options for them.
And one thing that contenders seem to agree on is more defense spending at this point. I mean, we have seen these geopolitical tensions with China brewing. Japan now sailing its vessel on the sensitive Taiwan Strait for the first time in decades as well. How is this relationship really going to affect also Japan's relationship with Washington as well as we see these tech exports against China?
So the defense area is one area where you saw the candidates, all candidates, but the three leading contenders specifically, outline a little bit of a more robust Japanese defense spending, robust Japanese defenses kind of posture. I think the most forward-leaning on that is going to be Takaichi and Ishiba. The latter is a former defense minister, and Takaichi herself has been very strong about making sure Japan's self-defense forces are prepared. In the midst of this election campaign, and your opening revealed this, of course, there are rising tensions between Japan and China over the stabbing of a 10-year-old boy and his subsequent death in China. But there's also been a series of intrusions, Chinese intrusions into Japanese airspace and territorial waters, a Japanese destroyer intruding into Chinese waters, and then, as you noted, a freedom of navigation operation by a Japanese destroyer just yesterday through the Taiwan Strait. So there's a quiet tit-for-tat upping of the tensions, the military tensions between Japan and China, in addition to this very sensitive issue of the child that was killed in China. So I think the next prime minister is going to have to make some tough choices. And what you heard in the debates over the campaign was people really saying that they would stand up and defend Japanese interests and call out China on its behavior. So I expect that the next prime minister is going to face some pretty tricky territory when it comes to managing the Japan-China relationship.
Not least of which is also managing the relationship with the White House, depending on the outcome post-November. But I do wonder, is there quite a spectrum of views when it comes to how Japan will align itself with Washington, depending on who, what the outcome is in this election? Because we know the former foreign minister, the economic security minister, are just a couple of the candidates that perhaps are more willing to push back against the US.
So Ishiba is the former defense minister, as we've already noted. He called for revising the status of forces agreement that governs the presence of U.S. military forces in Japan. Very politically difficult, but also something that Washington wouldn't welcome. He also called for some fairly serious thinking about Japan entering into a collective security arrangement with other powers, United States included, but in the Asia Pacific, again, pushing Japan into a position where its constitution would probably have to be revised. So that's Ishiba. The Takaichi wants American missiles on Japanese soil. She wants far more integration between U.S. and Japanese forces. She wants to make sure that extended deterrence works. So I think she's going to be fairly forward-leaning on trying to get the United States to demonstrate how it's going to deter aggression and defend Japan alongside the Japanese military. She has a tricky position on Yasukuni Shrine. She wants prime ministerial visits to Yasukuni, which of course would get in the way of a priority of the current Biden administration here in Washington, which is to strengthen Japan, Korea, U.S. trilateral relations. That Yasukuni Shrine visits by the prime minister to formalize that, of course, would create difficulty for Japan with its neighbor in South Korea and obviously also with its neighbor in China.
Yeah, we've seen those difficulties during the Abe administration, during the Junichiro Koizumi administration as well. Sheila Smith, good to have you with us, senior fellow at the Council on Foreign Relations. Now let's get more on the market impact when it comes to the LDP elections here in Japan. We have our equities reporter, Aya Wagatsuma, joining us. So it seems that right now what we continue to watch is perhaps the candidate's stance on the BOJ policy as well, what that would do to the yen, right? What are some of the big implications here of the election?
So thank you so much. And as for a lot of market participants are looking at the monetary policy views that the candidates are having. So Ishiba and Koizumi are quite hawkish on the monetary policy views, which would mean that the interest rates could potentially continue to go up, the yen could strengthen, and with that exporters would also fall in Japan. So Japan Japan stocks, which are mostly made up of exporting companies, will fall as well. And as for Takaichi, she is dovish on monetary policy views, so that would mean the yen would actually go up, that the yen would weaken, and Japanese stocks would eventually go up.
It's really interesting because we know that the BOJ is independent, but it's always a political pressure in any country that has big implications for the markets, right? Tell us a little bit about some of the other sectors that could also get impacted, because with Sheila, we're talking about how, for example, everybody wants to spend more on defense as well.
Yes, so that is exactly correct. Most of the candidates are really keen on raising defense spending. And already with the Kishida administration, there has been a record budget for the fiscal year starting in April, meaning that a lot of people are looking at the defense sector, especially companies like Mitsubishi Heavy or IHI. And other sectors that a lot of investors are looking at are also energy companies as well. All of the participants are actually very keen on nuclear power plant restarts. So that would mean companies, for example, like Hitachi or Tokyo Electric would be a focus for most of the investors.
Aya Wagatsuma here, our Japan equities reporter, with a preview of what to expect in the markets as, of course, we head towards the LDP presidential election this afternoon, Haidi.
Also heading towards, of course, in November, the U.S. election, Shery. We have the latest Bloomberg News and Morning Consult poll suggesting that the Democratic presidential nominee, Kamala Harris, is widening her gap over Donald Trump in 7 key swing states. Let's bring our senior editor, Wendy Benjaminson, who joins us out of Washington. The question, of course, was also, whether she was going to be able to keep up the momentum after the switch in the candidacy, after the convention boost as well. And it does seem like she's managing to convince some people.
Yes, she is. Her lead is still very tight. I mean, this is a deadlocked race. So her lead in each of the individual 7 swing states that Bloomberg News and Morning Consult polled last week, her lead is within the margin of error. But if you look at all the states combined, her lead is just outside the margin of error at 3 points. That is a tiny little lead, and any errors on her part, any problems with the campaign, any good things that Trump campaigns on, Donald Trump will certainly change that. So it's anyone's guess at this point who will win. Where she is doing particularly well is in closing the gap with voters on who they trust to manage the U.S. economy. Joe Biden was consistently, in our poll that started last October, was consistently behind Trump on that. And Trump is still ahead. But as you see there, Kamala Harris is narrowing that gap to a tiny margin, where she is just a few points behind him on trusting the economy. People find her economic policies more popular. They find, and they're more inclined to trust her on who will best handle the middle class.
So we're getting more clarity on her policies, because initially there was a lot of concern that voters did not know her, and she was a bit reluctant when it came to being interviewed as well.
Yes, that's true. She is warming up to that. She is doing more interviews with both local and national outlets. And she is starting to lay out policy proposals. There isn't a lot of deep detail in them, just like there isn't a lot of deep detail in Donald Trump's policy proposals, but they're out there. Raise taxes on those who make more than $400,000 a year. Expand the child tax credit. Give assistance to first-time home buyers. Those are all of her economic policies that were very popular with our poll respondents. His are also popular in terms of not taxing not taxing Social Security benefits, and but his 10% tariff on imported goods is very unpopular.
We're also watching for sort of more debates, right? We know that Harris's team has said they've accepted that October 23rd debate on CNN. We know that the former President Trump doesn't want any more debates at this point, but in terms of looking ahead to the VP debate, what can we expect? And I suppose how high are the stakes here for how well it goes for either side?
Well, honey, as you say, the stakes, this is going to be probably the last debate in this presidential cycle. So the stakes are extremely high for Governor Tim Walz of Minnesota and Ohio Senator J.D. Vance, the two running mates, Tim Walz being the Democrat, of course, and J.D. Vance being the Republican. So the stakes are high as surrogates for the top of the ticket who can talk about the values of the campaign. And of course, we do expect Tim Walz to hit J.D. Vance on his comments about women who don't have children, his comments about the Haitian immigrants in Ohio. And I think J.D. Vance will be looking at Tim Walz about the policies that he considers far too liberal for Americans, as well as some statements that Walz has made in the past, before he was Kamala Harris's running mate, that were not as accurate as they could have been.
Bloomberg senior editor Wendy Benjaminson there in Washington ahead of that VP debate next week. We do have more ahead on the Asia trade. This is Bloomberg.
Tokyo Electron CEO Toshiki Kawai says the rush into AI chips still has more room to run as a wealth of developing industries will drive more demand in the coming years. Our exclusive conversation also included the chip-making equipment maker's outlook in its key market of China, as well as a new partnership with Tata Electronics in India.
I think we'll continue to see growth in the AI segment. Growth in the AI server segment is forecast at an annual rate of 30% in the years 2023 to 2028. Combined with the introduction of more AI-related applications for PCs and smartphones next year, I expect a very strong growth. There's no doubt about the growth potential of artificial intelligence, but I think the market is focusing too much on that particular segment. I think the market has just crossed the threshold of the second phase of AI. Our projection is that overall chip demand will double in the next 5 years to $1 trillion in 2030, boosted by artificial intelligence, as well as augmented reality, virtual reality, and autonomous driving.
A big chunk of your business also comes from China. More than 40% of your revenue in the last fiscal year came from China. Do you expect this level of demand to continue, or has a lot of it been front-loaded by Chinese companies expecting more restrictions coming from the US and its allies?
A period of inventory correction last year suppressed investment into the high-end memory segment. On the other hand, investment into China grew because of initiatives over the last few years to increase capacity there. As a result, China sales grew to 40% of overall revenue. Now that the initial investment phase is over, China sales will likely fall below 40% in this second half and eventually settle down to 25 to 30%.
The repairs and maintenance of Tokyo Electron equipment, which is sort of how you keep also the trust from your customers, right? Could you see some restrictions on that, and are you concerned about that?
The importance of semiconductors remains unchanged. Given the global trends in digitalization and decarbonization, there will always be investment opportunities somewhere.
Let's talk about your new markets, because I know you just returned from India as well, and you just launched a partnership with Tata Electronics. But the partnership is very small so far, right? You're providing some engineers and services and training. How do you expect this partnership to grow in the next few years?
India's economy grew last year at a pace that far exceeded the US, Europe or China, and definitely Japan. So we're very excited about this new business opportunity in India. We see our strategic partnership with Tata as a high-value business opportunity. It's not just about contributing to Tata's chip business, but the development of India's chip sector. I'm looking forward to this new exciting chapter.
When could it turn out to be as exciting as the Chinese market has been for Tokyo Electron? When could it start offsetting some of the challenges that we might encounter with policy against Beijing at the moment?
We'll monitor the measures and curbed by governments and how they affect our business. I believe that as long as we keep offering high-level technology that is essential to customers, our efforts will lead to deals and growth for us.
My exclusive conversation with Tokyo Electron CEO Toshiki Kawai there. And of course, if you missed any part of that conversation, TV Go is your function. You can also watch us live and then dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
Take a look at how we're setting up when it comes to this final Friday session for Asian markets, and we are expecting a little bit more upside when it comes to trading in Aussie equities, just building on the gains that we've seen for much of this week, in particular when it comes to the surge in mining stocks. Of course, expected to see really that positive exposure to all of this China stimulus that is now potentially in the pipeline. Australian bonds looking like they're going to track lower after the US curve really flattened. Government bonds there tracking the unexpected drop in jobless claims that we saw in the US overnight, dampening those bets on Fed rate cut expectations. You can get more on markets and policy every week with the Bloomberg Australia podcast, delving into the biggest stories shaping the country's place in global business. Subscribe on Apple Podcasts, Spotify, via Bloomberg.com or wherever you get your favourite podcasts. The market opens are next in Sydney, Seoul and Tokyo. As we head into this last trading day, we're expecting stocks to really rally on the latest pledges from Chinese policymakers and leaders to shore up the property sector and really get this economic recovery on foot. That boost from Wall Street coming through as well. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. As Haidi, we're also setting up for the ruling party election here in Japan. Very low visibility on who could become the new prime minister, but of course, the new leader will face a myriad of economic and geopolitical challenges.
Yeah, one of those challenges, of course, is this relationship looking quite tenuous with Beijing at the moment. And of course, China having its own challenges and looking like policymakers and leaders are really stepping up at least the rhetoric when it comes to what they're willing to do to support the economy and meaningfully support the downturn that we've seen in the property sector. Expecting to see quite a bit of upside continue when it comes to these China stocks. Their best in more than a decade this week.
Yeah, that really supporting the offshore yuan as well. We continue to see it gain ground. And of course, at one point earlier in the week, we had topped that $7 per dollar level for the first time since 2023. A little bit of a different story when it comes to the Japanese yen. We have now topped 145. So we continue to see that weakness, of course, is a continuing narrative of the BOJ really pacing itself when it comes to the tightening path. Not to mention, of course, a little bit of volatility overnight as we head towards the LDP presidential elections this afternoon with very low visibility at the moment. We got CPI numbers for Tokyo, of course, an indicator of nationwide prices, again staying above that 2% level for the headline and core CPI numbers. We're seeing the Nikkei and the topics a little bit of a divergence, but at least the Nikkei right now continues to be around the highest levels in about 2 weeks. Take a look at how the Kospi is trading. We had seen some upside for Korean stocks as well. We're talking about the highest level since earlier this month, around September 3rd or so. The Kosdaq under a little bit of pressure. We continue to watch Samsung because we've heard they could be fined because of authorities finding that their workers had been exposed to radiation. So we'll be following that stock. And of course, we had the semiconductor market also moving a lot today on news of the DOJ probe on super macro computers. So we could see a little bit of pressure on the tech sector as well, Haidi.
Take a look at how we're setting up in just the first couple of minutes or so of the staggered session here in Australia, as of course we continue to expect to see that upside when it comes to particularly the China proxy parts of this trade, right, including the Aussie dollar, to see further upside. We already saw a gain of about 1% as the weakness in the US dollar really kind of helped that trade there as well. When it comes to equities, we're seeing upside of about 0.25%. Really, miners have really been leading this rally when it comes to expectations of who's going to get a boost within this economy from just a slew of stimulus, fiscal, monetary policy measures that we have seen out of Beijing. The capital injection announcement when it comes to some of the Chinese banks as well at play here as well. Take a look at treasuries. They got a bit stung when it comes to the overnight session. The jobs data was a little bit of a surprise, with new jobless claims dipping to that 4-month low last week, and that really has sort of put a little bit of a break on in terms of these Fed expectations as well. Pretty solid auction demand that we've seen over the past few sessions, though, Shery.
And we have breaking news at the moment. We are getting now China cutting its triple R from September 27th today. So we're talking about a 0.5 percentage point triple R cut at the moment, as we had already seen this being choreographed by Pan Gongsheng, the PBOC governor, earlier announcing the plan to cut the reserve requirement ratio for banks. Of course, we continue to see this stimulus measures coming from China, and at the moment we're hearing that China is now effectively cutting the triple R from today by 0.5 percentage point, already choreographed by Pan Gongsheng. But let's talk a little bit about all of the measures coming from Beijing, because we also had China's top leaders ramping up efforts to revive growth by pledging to support fiscal spending, not to mention also stabilize the property sector. Now, of course, this gives new momentum to those series of stimulus measures that have already been announced. Our China correspondent Min Lo joins us in Hong Kong. And Min, it seems that every day we're getting some new lines coming about China implementing a new measure to support the economy.
Yeah, I mean, that triple R cut just now, that's a very early announcement, but 1.5 hours before market open. That's a very swift follow-through of that policy announcement that was released on Tuesday by PBOC Governor Pan Gongsheng. And remember, he said there could be more cuts to come if necessary as well. And yesterday, that Politburo meeting really was quite an extraordinary one, right, given the timing of it coming in September. Typically not a time to examine the economy. That's usually reserved for the April, July or December meeting. So that really shows the urgency that the government has in paying attention to the economy and putting their whole weight behind meeting that growth target now. And what really stood out to me is that tone, especially around the property measures. It seems like the KPI for the government when it comes to property now is to stop the decline. Now, that's a phrase they have never used before. It's clear that the window for deflating the property sector has now closed, and they're now focusing on stopping that decline in home prices, the decline in home sales, that downturn that's been going on for 4 years. Economists say this is really the first time since the downturn that the government is really targeting a market rebound. And when it comes to the fiscal policy, the readout says the government will step up fiscal spending as necessary. This is a departure from past Politburo readouts where the government would say that they are carrying out a proactive fiscal policy. Now, what does stepping up fiscal spending really mean? Reuters is saying that the Ministry of Finance is looking to issue some 2 trillion yuan in special sovereign bonds, half of that dedicated to boosting consumption and half of that to tackle local government debt. So if that's true, this is a huge off-budget boost to fiscal spending. And then monetary policy-wise, the readout says forceful implementation of interest rates. Again, very different language from the past. They omitted the use of the word prudent in front of monetary policy. Although the measures have already been fleshed out by the PBOC, it's that tone that has shifted very significantly, showing the urgency that the government is putting behind the economy and its problems now.
The question is, one is how much of a cyclical uplift do all these measures contribute to the economy? And I suppose how sustainable is the policy impact, given we are looking at a number of long-term structural issues with this economy?
Yeah, well, that has been quite mixed so far. Bloomberg economics team thinks that with this stimulus blitz, China is going to be on track to hit that growth target of around 5% this year. But there are some economists that are still quite skeptical. They're hanging on to their growth forecast that's been cut in the past few weeks and months, saying that there's limited upside risk to that growth forecast this year. And there is still, a lot of skepticism around the follow-through on this big policy announcement, right? Like when it comes to boosting consumption, is that really going to lead to a structural change in terms of people's confidence around their income growth? How is income going to be distributed? Will there be a return of confidence to the private sector and the property sector as well? In the Politburo readout, there was a nod to existing measures of reducing those home buying curbs, cutting mortgage rates. But will there be more measures? Will the government step in as the buyer of last resort? Will they widen the use of the local government bonds to buy up unsold homes? So these are questions that we still don't have the answer to. And I think the key is really in the implementation. And if there is a disappointment when it comes to the follow-through on the policy, then we might see that rally fizzle out in the next few months.
Bloomberg's China correspondent Min Min Lo there. Let's bring our next guest, who says the latest news out of China is possibly the turning point for the country's markets. With us now is Kyle Rodda, senior market analyst at Capital.com. Well, certainly the relief rally continues, right? The sort of longer-term question as to whether this can or will address the more deep-rooted issues with this economy. At the moment, though, would you suggest that this rally will continue?
Yeah, it certainly has a possibility and prospect of continuing. I think this is a very significant inflection point because stripping out yesterday's news and the Politburo meeting, the measures that we saw at the start of the week were very much consistent with what we've seen from the Chinese authorities for 3 or 4 years, which is more or less trying to ring-fence financial stability risks. The big development at the start of the week was obviously the kind of news that the funds and brokers could tap the PBOC for liquidity to buy stocks. That said that they wanted asset values higher. That's kind of to counteract that balance sheet recession risk. But what has been absent over the last few years is really the kind of counter-cyclical, big bazooka, if you want to call it, that stimulus measures that are really counter-cyclical policy. And, for me, for the last few years, the reason why China has avoided that is because it has been focused on more de-risking its financial system, de-leveraging its property sector and restructuring its economy. There's two things that may have happened here as a result. Either China thinks it's mission accomplished on that front and it doesn't see those financial stability risks and the deflation of its property bubble being a major risk to its economy anymore. More likely, I think perhaps the pain just became simply too much. The authorities there have now greater capacity to be able to spend because obviously the Fed's cutting interest rates, inflation's less of a global concern, so they don't have to worry about effectively running counter-cyclical policy into a high inflation environment in the developed world, which could exacerbate things and therefore cause a knock-on effect of further financial stability risks in China as well. So it looks like they've taken the opportunity now to really do what they did, take out the playbook potentially. We still need to see the details, but potentially the playbook from the late 2010s and late 2000s and mid 2010s, which is to actually pump prime the economy. So we have to see the details, but this could be huge and this could be the turning point, not just for China's markets, but certainly for the global economic cycle as well.
So do you position to have some sort of exposure to China now?
Well, I mean, locally, obviously in Australia, to sort of put on my parochial hat, this is a really meaningful thing for local equities just because of how depressed miners have been recently. Clearly, the divergence that we've seen in the performance in some of those mining stocks and those cyclical areas of the market compared to, maybe growthier sides or high quality sides of the market as well. And I think we were talking about it, the last time I happened to be on about a month or so ago, is that, on paper, it was the time to buy miners because their multiples were low and the commodity cycle seemed to be quite depressed. But the missing factor was a proactive China, which at the time seemed very unlikely. So now we're talking about a situation that if China comes with the goods, and again, we have to see a little bit more in the detail when it comes to this fiscal policy spending and actually see some of those aggressive rate cuts coming through, tangibly. But if that happens, all of a sudden you start to talk about, a weaker dollar, an even weaker dollar, a bit of a reflation in commodity prices. We've already seen copper prices surge as well. And some of these low valued or undervalued mining stocks and cyclicals could could really start to outperform. We could start to see that rotation coming through, obviously in Australia, but around the world as well. If you look more globally, maybe small caps and cyclical areas like Europe, those other 493 stocks on Wall Street, those kinds of trades. So again, it's all very fresh, it's all very exciting, it's all very new. It depends on the details. But if China does what it's done in the past with these sorts of measures, these counter-cyclical measures, those are the kind of trades that might start to be the kind of the winning ones going into the end of the year.
Kyle, we are just getting that resumption of trade when it comes to Star Entertainment, and perhaps unsurprisingly, we're seeing that big fall of 44% trade resuming after the long-awaited and pretty miserable set of results. They got the debt deal done, and obviously the investigation is ongoing, writing to the regulators, I think, due by close of business today, in terms of needing to really explain how they can potentially go forward operationally. So we'll be watching that, certainly. But domestically within Australia, what sort of opportunities do you see at the moment? This is a market that's pretty expensive, right? It's been trading at or near record highs. The Aussie dollar is also seeing a resurgence as well. Does this narrative kind of play out for the rest of the year?
Yeah, well, it does. Like you said, up until recently, multiples have been, very stretched relative to history. You sort of take out the kind of pandemic boom, because that's a bit of an aberration. But, if we talk about the ASX 200 as being a sort of a dividend play, dividend yields across the ASX 200 have been as low as they've been for perhaps decades. But again, this is where this kind of China trade starts to become very interesting, because the areas of the market that have been undervalued are those mining stocks, those cyclical names, those that have become a little bit stretched, the financials and some of those other, high value, sort of low growth kind of names in the ASX 200, which really has just been the beneficiary of global flows as the Fed starts to cut interest rates and money has to go somewhere locally. If we start to see that rotation coming through, which, if you look at the divergence between the financial sector and the material sector, even before this week, was becoming quite stretched on a historical basis. That rotation trade, and even then just a moderate kind of compression in valuations for some of those expensive names, and then a reflation of valuations for some of those cheaper cyclical stocks. That's the kind of thing that can start to make the PE multiples look a little bit more attractive. Can start to boost actual earnings that can flow through to dividend yields. And then all of a sudden the ASX 200 looks a little bit more attractive again. So on a trailing basis, the market doesn't look fantastic. It looks too expensive. But again, we've got this new potential inflection point coming through for a very, very cyclical market to benefit from. And if that does happen, then you'd suspect that the ASX 200, the Aussie dollar as well, Aussie assets would be one way, especially because sovereign and country still exist in China, for investors to get exposure to the Chinese recovery.
And Kyle, before we let you go, it's election day here in Japan, and I know that you haven't been that positive about the outlook for Japanese markets. How are you factoring in this event risk?
Yeah, I think really it depends very much now on the currency channel. So if we start to see the US dollar continue to depreciate and the yen appreciate, there's still upside risk to Japanese rates. The Nikkei should trail the rest of the world and underperform just on that basis. Again, the big swing factor, and at the risk of harping on the message because it is so fresh and new, if we see a bit of a cyclical uplift around the world and that leads to stronger global growth, Japan will benefit from that, although I suspect it will not be the kind of market that will, perhaps outperform on a relative basis. So still a little bit bearish on the Nikkei just because of, again, that sort of inflection in the economic cycle, US dollar, yen channel. But this China story will be significant for Japan as well.
Kyle Rodda, always good to have you with us, senior market analyst at Capital.com. We have more ahead on the Asia trade. This is Bloomberg. Japan's ruling party votes for a new leader later today, with the winner set to replace the outgoing Fumio Kishida as prime minister. For more, Japan economy and government reporter Alistair Gale joins us now. And Alistair, we've been talking extensively about the economic challenges that the new prime minister will face. But now, even today, this past week, we're seeing brewing tensions with China.
That's right. I mean, the geopolitical side of things has not really been a factor in this LDP election until the last few days. We've seen, obviously, there's this tragic incident of a Japanese child that was killed in China in a stabbing attack. We've also had a Chinese military aircraft which encroached into Japanese territorial airspace. And then we've also learned that Japan has sent a warship through the Taiwan Strait. So this has really brought the geopolitical issues to the forefront, and now we're seeing the candidates talk about this, and there's more of a focus on what they're going to do on foreign policy, which is interesting because elections are normally about the economy, and this time around that's certainly the case, but there's this geopolitical overlay as well.
And we have some hardliners here contending for that post.
We do. In particular, Sanae Takaichi, who is a staunch conservative, advocates a very strong line against China. She's known as someone that, is a strong believer in Japanese nationalism. She goes to the Yasukuni Shrine in Tokyo here, which is controversial for other countries, China and Korea, South Korea, North Korea in particular, because it commemorates Japanese people who died in the war, including war criminals. So she said that she will continue to go to the shrine. We may see, if she wins, tensions ratchet up even further with the Japanese neighbors.
Yeah, and that might complicate also its relationship with the United States.
That's true. I mean, there are a few ways to read this. Of course, the mood in the US towards China is very hawkish right now. So in some ways, having a Japanese prime minister who is aligned with that could work well for whoever becomes the next US president. But, it makes the US uncomfortable as well to see tensions in the region between Japan and China. They would like to have, a cooperative relationship, I think. So this is something that I think will be watched closely.
Japan economy and government reporter Alistair Gale here, and Haidi, of course, we will continue to bring you those updates as we head towards the LDP presidential election later this afternoon.
Yeah, a geopolitical fraught time in the world, Shery, as we see Israeli Prime Minister Benjamin Netanyahu rejecting that push for a ceasefire with Hezbollah, I should say, saying his military will indefinitely maintain its bombardment of the militant group and targets that are in Lebanon. Let's bring in Michael Heath for more. So what is sort of the long game here, I guess? What would sort of be tantamount to objectives achieved in this operation?
Yeah, I think, Israel's obviously looking to degrade the missile capability of Hezbollah. It's been launching projectiles, whether rockets or drones, Israel since the war in Gaza began, and Israel's had to evacuate thousands of people from the north of the country to get them to safety. So Israel wants to degrade that attacking capability, and it also really wants Hezbollah to be pushed back, sort of along the lines of what the ceasefire was agreed in 2006. So it's sort of not surprising that that Prime Minister Netanyahu rejected the ceasefire proposal, and he's not alone here. I mean, Israel's political class is fairly solidly behind this. No one's talking about a ceasefire. I mean, this has been sort of coming for a long time, and the surprise in a way was that Gaza exploded rather than Hezbollah and Israel, because that's sort of been expected for a while. But Hezbollah is a very, very tough organisation. I mean, they're battle-hardened. They fought in Syria to help defend during the civil war to defend President Assad, and they've been around for a while. They've got a lot of missiles, so it's likely to take some time. And the notion of a ceasefire that runs for 3 weeks, I think, would make Israel uncomfortable too, because Hezbollah is more than likely just going to rearm during that time and reorganise. So perhaps a shorter one might be an option, but we'll just have to see.
Also quite an awkward time for Netanyahu to be addressing the United Nations today.
Yeah, I mean, look, he's a former UN ambassador, so he does know the organisation. And Israel's perspective is that, I mean, a lot of people, the US and Israel in particular, think that there's just an underlying or an innate hostility in the UN towards Israel. It gets a lot more focus than it perhaps warrants. But Israel senses it doesn't want to. There's an aim to sort of try to isolate it, and it feels like staying away from that would further encourage that. So he's sort of taking his critics head on there, and he's a good media performer. He's a good speaker. So I think it's going to be probably quite an interesting speech, but he won't take a step back whatsoever. So, but yeah, he's going to be running across a lot of people who probably aren't particularly friendly towards him as well.
Bloomberg's Michael Heath there. Some of the other stories that we're following at the moment. The top federal prosecutor in Manhattan says New York City Mayor Eric Adams engaged in years of corruption. Adams has been charged with bribery, conspiracy and breaking campaign finance laws. This includes accepting more than $100,000 in lavish bribes from foreign nationals. Adams, who is seeking re-election, says he will continue to serve as mayor and plans to defend himself against the charges.
From here, my attorneys will take care of the case so I can take care of the city. My day-to-day will not change. I will continue to do the job for 8.3 million New Yorkers that I was elected to do.
Sources say Nicolas Maduro's Venezuela is not on a list of prospective invitees to join BRICS. The list was circulated among the group's members this week. Maduro has chased an invite, hoping the alliance would bolster his government's legitimacy. Brazil became uncomfortable with inviting Venezuela to join after its neighbours' disputed July election. More ahead here on the Asia Trade. This is Bloomberg.
The global easing cycle continues. We had the Swiss National Bank cut rates by a quarter point again for a third straight meeting, warning of more to come. All of this in order to try to contain the incredible strength of the franc that we've seen so far. You can see not a lot of happening at this moment, but the Mexican peso also reacted to that cut in interest rates by Banxico, joining easing steps by Hungary, the Czech Republic earlier this week as well. Mexican peso actually strengthened after the cut because investors were expecting a larger cut. It was a smaller 25 basis point one. And of course, we continue to be on watch on the offshore yuan. We surpassed that 7 level for the first time since 2023 earlier in the week. We're very close to those levels right now, Haidi.
Yeah, and really it is on the back of this China rebound enthusiasm that we're seeing this rally be extended in Europe as well. European stocks had closed in the previous session at record levels. That China hope fueling that rally. We're seeing some upside in futures really continuing that theme. Euro Stoxx 50 futures up about 0.25%. We're seeing the same sort of level of enthusiasm when it comes to German DAX futures as well after notching their highest close for European equities on record. Really a lot of the enthusiasm that potentially we see some of these sectors in Europe benefit from a recovery in China. Watching luxury in particular, we had the news breaking that LVMH is investing in Moncler, so seeing some reaction there today.
Japan's ruling LDP votes for a new leader in a few hours, with the winner set to become the nation's next prime minister. It's been one of the most open races in the Conservative Party's history, with a record 9 candidates in the running.
It's a crowded field of contenders vying for a job that comes with unprecedented challenges. The large field of candidates in Japan's ruling party election makes it likely that no one will secure a majority, which would trigger another round between the top 2 contenders. Among those on watch for a potential runoff, Shinjiro Koizumi, the son of a former prime minister who at 43 could become Japan's youngest prime minister. Shigeru Ishiba, a former defense minister who's running for the 5th time. And Sanae Takaichi, a hardline conservative who would be Japan's first female prime minister if she wins her party's backing. She's also one of the most outspoken on the Bank of Japan's policy path as an advocate of monetary easing.
She has basically said that the BOJ is making a mistake by moving as quickly as it is to raise interest rates. And frankly, I think that sets the Takaichi government up for possible conflict because she really wants easy money to continue.
Japan's next leader will need to grapple with geopolitical challenges as well, as the country gets pulled deeper into tensions between the U.S. and China. Tokyo faces threats of retaliation from Beijing amid pressure from Washington to tighten restrictions on sales of advanced chip technology. Adding to the uncertainties, the tight U.S. presidential race, though both candidates for the White House have opposed Nippon Steel's $14 billion takeover bid for U.S. Steel.
U.S. Steel should remain American-owned and American-operated.
U.S. steel is now being sold to Japan. I will stop it. We got to do fast. We got to work fast, but we're not going to let it happen.
Some common ground for most of the candidates is the revival of Japan's nuclear power industry. 13 years after the Fukushima disaster, this is seen as a way to improve energy independence and reduce carbon emissions. Whoever wins Friday's vote is expected to call a national election soon, seeking to shore up support from a Japanese public weary of scandal and demanding sustainable economic growth.
Take a look at how we're faring just about half an hour into the start of cash trading across some of the major markets this Friday here in Asia. Of course, so much of that exuberance from yet more measures, more pledges from Chinese policymakers and the leadership in terms of critically their willingness now to, it sounds like almost close to whatever it takes to put a floor under the beleaguered property sector. That is going to be really key. They've also cut that RRR in that announcement early in the morning. A little bit surprising when it comes to the timing, given that these sort of announcements typically in the past have come towards the end of the trading day, but that RRR cut essentially cutting the amount of cash banks must keep in their reserves. The intent, of course, is to free up cash for financial institutions to try and bolster their ability and firepower to boost the economy. So that 0.5 percentage point reduction to the RRR was well flagged as well in that media conference, which included the PBOC and, quote, is intended at strengthening the monetary policy adjustment for steady growth. We are seeing, Shery, quite a bit of broad upside here across trading in Asia. Of course, got a boost from the Wall Street session and some of the sentiment stateside as well.
And Haidi, as you just mentioned, all of the measures that have been carried out by China, let's actually discuss the impact with Asia equities reporter Winnie Su and our credit markets editor Finbar Flynn. So, Winnie, let me start with you because Haidi just mentioned how a lot of the timing of these measures have been a bit off from what we were expecting.
Yeah, exactly. So, at least Goldman Sachs is saying that this time it's really different for China. And what's interesting, like you mentioned, the timing, it's off schedule, but also we've got the Politburo meeting yesterday, but right before that, it was the PBOC, and right before that, that was the Fed's rate cut. So it seems like everything is planned just one after the other to really show that the government is here to kind of support, and they see that urgency to kind of to put a floor to the declining stock market. So beyond that timing, it's also the content that's really interesting from the readout. You see them really saying that they are going to lift or support the property market, and also when it comes to the capital market, they say that they're going to forcefully and greatly guide funds back into the market.
So really, that has changed sentiment, especially with equities now continuing to be supported.
Yes. So we actually see the sentiment turning even more positive throughout the week. And yesterday, when we talked to traders, they say that it reminds them of the time when China exited COVID. So it was, funds rushing in to join this rally, and you've got people who don't want to miss out. And also because China's valuation right now is just so cheap, so a lot of people still remaining that underweight, they see a good timing to buy into the market. But, you've also, so the technical rebound is here. The question is then if people are bullish for the long term or not. And when we spoke to Men Group, the biggest hedge fund in the world, they say that they're bullish on China because of the easing policy that is going to come in even more, and also the social reform.
Finbar, it's kind of a different picture when it comes to the outlook for Chinese bonds, right? This warning of Japanification despite the stimulus plan, because all of these measures doesn't exactly sort of set aside the risk of the balance sheet recession, much like the sort of scenario that Japan has faced in the past.
Yes, indeed. I mean, we are seeing momentous moves in markets, and we're seeing momentous moves from what the policymakers in Beijing are doing. It comes back largely to what we saw here in Japan decades ago with the property sector. So at last, authorities in China are again trying to just do that extra bit to secure and to prop up the property sector, which has been pulling down consumption, pulling down the economy in many parts. But as you said, on the bonds, bonds have been rallying in China for quite a while, and we've seen that 30-year Chinese government bond has got down to levels that are around the Japanese Chinese government bond levels in the past. So, as you said, we have this story out this morning on the Japanification of Chinese debt. But people don't see that what has happened this week will be enough to stop that trend continuing, because, as my colleagues have said, what the actual PBOC have said is they're going to continue with forceful rate cuts, and that's key here.
Yeah, so much of it is down to execution, right, as well as, if there's real implications for not just a cyclical recovery, but a structural recovery as well. Winnie, when it comes to, where the flows are actually going, what are funds buying at the moment?
Yeah, so there seems to be a lot of rotation going on as well. Yesterday, we spoke to Eastspring, and they're saying that they are selling defensive stocks and rotating into more growth stocks after all these policy measures coming out. And defensive, they're saying that, selling utilities, and when it comes to growth, they mentioned some of the e-commerce stocks that have shown very low valuation at the moment. And consumption shares are actually another bright area that people are looking at, not just because of the low valuation, but also because of, we've heard, the cash handouts that they announced earlier this week as well. And financial shares are still looking quite attractive, also because of the news when it comes to injecting more capital into the market.
Finbar, the notion of Japanification for China, just walk us through that a little bit more, because that's been going on for a while when we continue to talk about these deflationary trends really getting very much embedded in the Chinese economy.
Yes, indeed. So what we're seeing now is what happened here in Japan, we'll say 20, 30 years ago. But what the difference is that China has not embarked yet on these unconventional measures. It's not doing these, negative interest rates yet. So the levels are really, the 2%, but they could come down a lot further. We saw here in Japan that levels were at minus levels. So what investors are really looking out for is how much further these rates go lower in China, because they're just really at the start of getting a hold of their own property crisis.
It kind of does go back to the question, right? And you don't want to sort of, mull the downside too much when there has been so much effort in the communication from policymakers. But this does seem most likely to give a short to medium term cyclical positive effect on the economy. The longer term structural problems, how much does that really kind of mirror what we've seen in Japan with things like, demographics and productivity in the labour force? And does that seem like a sense of inevitability if you take a look at what could happen?
So I think you put your finger on it, that we have these demographic forces in China that are very similar to what is happening, if not worse, in Japan, because you have the population shrinking. But the big difference with China and Japan in this respect is that China has this massive flood of unsold homes and unbuilt homes, and that is something that Japan actually, there were always people in the homes, but China has this flood of unfinished houses, and they have to get through that first of all before they can really start, propping up the sector. And we've seen also this week that authorities have said they're going to put more money into the banks. The banks in China are very secure, but they do need to start lending more to get people out there to actually spend and buy homes.
Our credit editor Finbar Flynn here with us, our Asia Equities reporter Winnie Su as well, with really what's happening on the Chinese markets and economy. We have more ahead on the Asia trade. This is Bloomberg.
New World Development CEO Adrian Cheng has resigned after the Hong Kong-based property developer posted its first annual loss in 2 decades. For more, let's bring Hong Kong real estate reporter Shauna Kwan. And Shauna, what do we know when it comes to the implications of the announcements yesterday, and what does this mean for succession? Because this is such a rarity in terms of, you just don't see this when it comes to these families and these businesses that work so hard at planning succession.
Yes, so yesterday has been a very big day for New World. Obviously, we know about the resignation of the very iconic heir Adrian Chang, so he will be replaced by the former COO Ma Xiu-cheng. Interestingly, Ma Xiu-cheng had been the former Secretary for Development at the Hong Kong government. Separately, we also learned about their earnings result yesterday. So like New World had warned before, it had recorded a loss of almost 20 billion Hong Kong dollars. That's 2.5 billion US dollars. So, yeah.
And what's been the reaction so far?
So, even though it's very surprising, analysts are not putting a lot of weight into this change because the difficulties facing New World are still immense. For example, interest rate is still high and it's still one of the most indebted developers in the city. And obviously, the property market in Hong Kong is still in a lot of pains. So people think that it takes more than a change of CEO to turn things around.
Any idea what Adrian will do now?
So in the press conference yesterday, he said that he had thought about his future and then he wanted to devote more time into public service, and he will also look after the operator of the K11 brand. The brand that he had created that infused art into office buildings and shopping malls. So I think despite the departure from New World, he will remain very busy.
Hong Kong real estate reporter Shauna Kwan. Taking a look at some of the other corporate headlines that we're following, in South Korean regulators say Samsung has violated nuclear safety rules after exposing workers at a semiconductor plant to radiation. Been fined less than $8,000, but could face further penalties for 2 other violations. 2 workers needed hospital treatment earlier this year after being exposed to radiation levels far above the annual limit. Supermicro plunged the most in a month on a report that the US Justice Department is looking into an ex-employee's claims of accounting violations. Sources say a prosecutor has reached out to people who may have relevant information. An ex-employee claimed in federal court that Supermicro sought to overstate its revenue, and a Hindenburg research report claimed accounting red flags. Wall Street heavyweight Citi and Apollo are teaming up to work together on a $25 billion worth of deals in the private credit market over the next 5 years. Mubadala and Apollo's insurance unit, Athene, will also participate. Bloomberg has learned that the exclusive partnership will arrange financing for corporate and private equity clients. More ahead on the Asia trade, this is Bloomberg.
Tokyo Electron continues to rise in the Asian session. It's gained more than 10% this week already, really being boosted by that positive revenue forecast coming from Micron. Tokyo Electron's one of the biggest clients is Micron, getting 4% of the revenue from that company. CEO Toshiki Kawai says the rush into AI chips still has more room to run, as a wealth of developing industries will drive more demand in the coming years. Our exclusive conversation also included Japan's biggest chip equipment maker's outlook in its key market of China, as well as a new partnership with Tata Electronics in India.
I think we'll continue to see growth in the AI segment. Growth in the AI server segment is forecast at an annual rate of 30% in the years 2023 to 2028. Combined with the introduction of more AI-related applications for PCs and smartphones next year, I expect a very strong growth. There's no doubt about the growth potential of artificial intelligence, but I think the market is focusing too much on that particular segment. I think the market has just crossed the threshold of the second phase of AI. Our projection is that overall chip demand will double in the next 5 years to $1 trillion in 2030, boosted by artificial intelligence, as well as augmented reality, virtual reality, and autonomous driving.
A big chunk of your business also comes from China. More than 40% of your revenue in the last fiscal year came from China. Do you expect this level of demand to continue, or has a lot of it been front-loaded by Chinese companies expecting more restrictions coming from the US and its allies?
A period of inventory correction last year suppressed investment into the high-end memory segment. On the other hand, investment into China grew because of initiatives over the last few years to increase capacity there. As a result, China sales grew to 40% of overall revenue. Now that the initial investment phase is over, China sales will likely fall below 40% in this second half and eventually settle down to 25 to 30%.
The repairs and maintenance of Tokyo Electron equipment, which is sort of how you keep also the trust from your customers, right? Could you see some restrictions on that, and are you concerned about that?
The importance of semiconductors remains unchanged. Given the global trends in digitalization and decarbonization, there will always be investment opportunities somewhere.
Let's talk about your new markets, because I know you just returned from India as well, and I just launched a partnership with Tata Electronics. But the partnership is very small so far, right? You're providing some engineers and services and training. How do you expect this partnership to grow in the next few years?
India's economy grew last year at a pace that far exceeded the US, Europe or China, and definitely Japan. So we're very excited about this new business opportunity in India. We see our strategic partnership with Tata as a high-value business opportunity. It's not just about contributing to Tata's chip business, but the development of India's chip sector. I'm looking forward to this new exciting chapter.
When could it turn out to be as exciting as the Chinese market has been for Tokyo Electron? When could it start offsetting some of the challenges that we might encounter with policy against Beijing at the moment?
We'll monitor the measures and curbs by governments and how they affect our business. I believe that as long as we keep offering high-level technology that is essential to customers, our efforts will lead to deals and growth for us.
An exclusive conversation with Tokyo Electron CEO Toshiki Kawai there as we continue to watch Haidi in the semiconductor space today.
Yeah, watching really the broad rally that we're seeing across most major markets, Shery, and a lot of this has been really down to the China story, and really a good time indeed when it comes to what we're seeing from the Australian Treasurer, Jim Chalmers, on his trip to China at the moment, and some of the sort of readouts coming from Jim Chalmers saying the weakness in the Chinese economy is flowing through to Australia, of course, as we know, through things like demand for iron ore and other commodities, as well as services, education, and other sort of key trades in that trading relationship. He says that the China stimulus measures are a really welcome development, that the China slowdown is a key factor when it comes to weaker global growth. When it comes to the takeaways from this visit, Chalmers saying that the two sides have agreed to hold a strategic economic dialogue annually. So he's speaking to reporters there in Beijing after, of course, we have really kind of seen to be watching for whether we'll see that meaningful sort of improvement in that relationship, given that this comes after a number of years of a cooling in bilateral relations. He's continuing to hold meetings in Beijing throughout the course of Friday there as well. But of course, some of the optimism when it comes to the stimulus measures that have been announced, given that our resource-heavy economy here in Australia is so heavily geared towards Chinese steel mills, Chinese property demand, and that pledge from Chinese leaders to put a floor under that slowdown in property.
Yeah, so take a look at how we're setting up for the Chinese market opens, because we have the CSI 300 already headed for its biggest weekly gain in almost a decade. And those consumer stocks have really led the rally. Of course, we are expecting that cyclical upside coming from all of those stimulus measures. We are watching the 10-year yield as well. It's now gaining ground. That's surprising. We already had the biggest jump since November of 2022 in the previous session. And remember, the bond market rally that seemed unstoppable on the pessimism about the Chinese economy now fading, and we are seeing those yields now starting to gain ground as well. This is the setup as U.S. futures not doing much at the moment. We did have Wall Street rising. We are seeing some more positive data when it comes to the U.S. as well, with economic growth having recovered a little bit better after the pandemic. And we also had jobless claims falling to a 4-month low in the U.S. So really it's this divergence when it comes to the strength of the U.S. economy, the weakness in the Chinese economy, and of course where monetary policy goes from here.
One of the big benefactors of potential stimulus and an uplift, a cyclical uplift at least, when it comes to Chinese economic growth is, of course, the luxury sector. And we were just speaking to the Brantley CEO a little bit earlier this week, talking about, how even with emerging markets like India and Southeast Asia, China remains such a key component of growth for these companies. Well, this is one person who's benefiting a big time, right? Bernard Arnault, of course, entering Thursday, having lost more wealth this year than any other billionaire, his fortune slumping by $24 billion. But we are seeing that surge now potentially coming through with the green light from Chinese leaders to supercharge stimulus. And we have seen kind of the prospects when it comes to his billions really increasing. His net worth soared on Thursday by $17 billion to $201 billion, his third largest one-day increase ever, given the big jump in shares of LVMH jumping 10% on bets that we will see this revived appetite for buying luxury goods in China.
Yeah, and Rich Go is your function, right? If you want to check out the rankings, and we know that Arnault is the world's fourth richest person at the moment, with Asia accounting for 38% of LVMH's sales in 2023, and of course China being a large part of that pie. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.